This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachorthis. Thanks for joining us at XM.com. The world's reserve currency recovered some lost ground on Friday after a decent U.S. employment report saw traders cover or trim some of their previous short positions. Non-farm payrolls rose by 1.76 million in July, more than the forecast of 1.6 million. These appear decent at first glance, but remember this data reflect the second week of July, so the disruption caused by the latest wave of infections in America will mostly show up in next month's numbers. Yet it's not all bleak, at least for the dollar. The founding pillar of the recent rally in euro-dollar has been the perception that Europe will recover faster than America thanks to a better management of the health crisis. That has been a reasonable assumption so far, though the winds of change may be blowing. Daily U.S. infections are still far higher than those in Europe, but if one strips out the absolute numbers and just looks at the trend, America is slowing down while Europe is sadly accelerating again. If this contagion trend continues, the narrative that Europe will out-recover the U.S. might take a beating soon. The other piece of big news over the weekend was that President Trump signed a series of executive orders to provide more assistance to struggling Americans, bypassing the stalled negotiations in Congress. The White House froze evictions, paused the payrolls tax, provided relief for student loans, and extended the extra unemployment benefits, albeit at a reduced rate of $400 per week from $600 per week previously. Yet there was barely any reaction in the markets on Monday. Why? Most likely because there is bad news behind the seemingly tremendous headlines. The Democrats so far were holding out for a bigger stimulus package in these negotiations, confident they had all the leverage. Now, though, the political urgency to strike a deal has evaporated. Ultimately, this may argue for a slightly stronger greenback as the deficit won't go entirely berserk, but it's bad news for stocks and perhaps risky assets more broadly. This was today's Daily Market Comment. Thanks for joining us at XM.com.